Good afternoon. This is Mike Predelson, the Bear Market Investor, with the market update for February 4, 2011. We're here doing the weekend update on the S&P 500 stock index. I want to draw your attention once again to the fact that the wave structure as of the last video remains intact. I am going to keep it this way. This has the wave 3 of 5 of C completing here at this level right here. We had a fourth wave in the form of a running flat, which is composed of 3 waves down, 3 waves up, and 5 waves down, completing the fourth of 5th of C. And then we have 5 waves up to the top here. Now, we may or may not be done with this. What I mean is there are a few different ways you can slice and dice this, but I do believe that at least a 5-wave push has just about concluded, if not already, to the peak that we had on Friday. The question then becomes that of degree. What I mean by that is, in terms of overall degree, if we actually were to say that this should be the top of 5 of C, then that means that the bear market rally here that we've had all the way back from March 2009 probably is concluding at this level under the best Elliott wave interpretation that we have available to us right now. There is another possibility too that would still keep this overall wave structure intact, but that would have us concluding wave 1 of 5 of C at the levels on Friday, or just about, perhaps with another push on Monday. But it does look like we should be looking at a possible reversal transpiring on Monday. Now let's go ahead and examine this 5-wave push right here, and we'll get into some finer detail in just a moment and some shorter time frames. But indicators are always very good for examining wave structure. The RSI in particular is very good, as is the MACD and MACD histogram. What we can see here is the best way of looking at this 5-wave push right here has us concluding the third wave in this 5-wave push here at this level. As you can see, the strength began to wane right after that peak was put in. And then we had a fourth wave. As I was talking about, this probably being part of a fourth wave right here could have been a triangle. Turned out to be a B wave followed by a C wave. So we had an A B wave, and then a C wave, and then we've had approximately 5-wave push up here to the levels that we saw at the end of the day on Friday. Let's go ahead and examine this in closer detail. We're here looking at the 2-minute chart of the S&P 500 stock index. Now this is quite granular, and I am going to get into wave structure in a very, very short time frame. So I hope I don't make your head spin here. I can even get confused on this myself as I'm saying it to you. So I've had to record this video, in fact, or this portion of the video a couple times over because I get screwed up when I'm trying to tell you. In any case, what I can be sure of is that this is the bottom of a fourth wave. Okay? As I know in the last video that I did believe there was a good chance we were working a fourth wave right there. This turned out to be the end of the B wave triangle of wave 4. And that we had the C wave concluding at this level of wave 4. I can be sure this is a fourth wave. Couple different ways you can dissect this rally all the way up until the highs that we had on Friday towards the end of the session. The first way, and the most immediately bearish, is to say that we in fact concluded a 5-wave push up at these levels. However, there is another interpretation that has us completing the first wave of this 5th wave at this level right here. We had a second wave. Then we're working on the first wave, or completing the first wave of the third at this level. Okay, that's more bullish for the short term than the possibility that we did in fact complete 5 waves up. Now, under the interpretation that we did complete 5 waves up, this counts like this. we had first wave, second wave, third wave, fourth wave, which was actually a fairly deep retracement, but has no wave overlap, as you can see, and then we had a 5-way push. This looks to be a very clean 5-way push. It's just, what is this? Is this altogether a 5-way push? Or is this the first wave? Then this, from this point right here, is a 5-way push up to this. I can't be sure yet. I cannot be sure yet because we haven't taken out any areas of support. Once we start doing that, it's easier to see where we are in the wave structure and begin to confirm the possibility that we have a much longer term reversal that's taking place. So we need to look at this in proper context and with the information that we have available to us. Entirely valid are both, wave counts here that have us regardless completing a fourth wave right here, but then we could have completed that 5-way push right at this level, and 5 smaller waves right here, or that we could be completing the first of the third right here of the 5th wave that started at this point at the levels that we saw on Friday. So 2 different possibilities, but I wanted to give you both of them because both of them are quite valid. That would suggest a very strong push to the upside, perhaps sometime middle of the day on Monday or something like that, in a third of 5th. But until we see that type of surge, we can't know what the wave count is. If we do get that, I know exactly where we are. If we get a sell-off that goes below this and then finally takes out that 4th wave, then I can be sure that we had a 5-way push up to this point, ending at those levels on Friday, or possibly with a little tiny surge on Monday. Then we have to look at the larger context. Is the 5th wave really the 5th of C that we just completed? Or is it the first of the 5th of C? So I'm not trying to make your head spin. Elliott wave can be very, very confusing because you have to look at the degree of trend, the degree of the wave. And so there are different interpretations here, and until we get more information, I cannot be sure of where we are in that wave structure entirely. But I can say that there is a possibility anyways in the most immediately bearish outlook that we have, most immediately bearish count, I should say, that we had in fact concluded or will sow with one more small push to the upside on Monday, the entire rally from the March 2009 lows. However, again, I noted there are different interpretations there, and I cannot say, at least within this 5th wave right here that we know we're working in from this 4th, what the case is. I cannot say that for sure yet. I will hopefully be able to tell you something Monday or Tuesday, but until that point, we have some options, and I wanted to lay those out for you. Now let's go ahead and jump into the volatility index. Now we're here looking at the volatility index in the daily time frame. As of the last video, I was talking about further weakness in the volatility index and that we're probably going to come back down to tag this ascending area of support before getting a bounce. But we did not complete the wave structure within the S&P 500. We had to have further upside. That was why we continued on down on Friday. So at this point, there is a good possibility we're coming back down to tag this horizontal level of support for a third time in 2 months. This is bearish, okay? If we actually have this level hold up, that puts a triple bottom in the volatility index. That's not good for the market because that does imply that we're going to see a pretty strong surge in volatility after that. Usually triple bottoms, triple tops are about the greatest indicator you have of a reversal that's about to transpire. So I do think there's a good possibility we're coming back down here. I think that could be Monday, maybe Tuesday, but probably on Monday, and then we'll have to wait and see what happens. Doesn't, of course, mean that we can't move lower than this horizontal level of support, or that we can't remain at extreme complacent levels for extended periods of time. All that stuff is entirely possible. However, in context with the rally that we've had since March 2009, and from the April 2010 sell-off, that surge in volatility that we had up until this point, there's no reason to expect a whole lot of further downside in the volatility index. Doesn't mean we can't get it again, but I am looking for, in the context of the wave structure as we currently have it, a surge in volatility very soon that will eventually lead us up to those levels right here, that 24 area in the volatility index, which is a good horizontal level of resistance, and then on to that 78.6% and the longer term declining area of resistance in the volatility index, going all the way back to the 2008 panic, through that April 2010 panic, and to right here at these levels. Once we see that surge, we'll want to see what happens, what areas of resistance we break, and what the wave structure looks like in the S&P 500. Then, of course, we can have a better picture of what the market is doing in the larger context. But for now, in any case, it does look like we're probably coming back down to test this for a third time and perhaps a final time. At that point, we'll take a look next week, probably early on, and we'll have a good indication of what that wave structure looks like, what we can expect in the volatility index. Have a great weekend.